Hope everyone's doing well. Welcome back to another weekly outlook. So cool. We've had what I would say is an extremely interesting, but sort of boring week, really, right? Now, we sort of anticipated, coming into this week that we have, a lot of red folders. We had Trump speaking on the Wednesday. We had the ADP. Then we had the Euro interest rate decision, unemployment claims, and then of course the big move NFP, which is probably the smallest mover of the week somehow. Typically tends to be the biggest. So, we already knew that it's a new monthly candle. You have all these news events. A lot can happen, and a lot did happen. I believe I saw somebody say this is the biggest weekly candle on the DXY since 2022 or something like that. So that's 3 years ago. Pretty crazy, right? Showed the amount of volatility that we just sort of had. Now, what's really interesting, and I would say to an extent annoying, is that we've had a weekly candle where every daily candle has moved in one direction. So as you guys can see, Monday, Tuesday, Wednesday, Thursday, Friday. So meaning it's not really giving us a solid chance to get in on any retracements, right? Even if I go down to our 4 hour, if we, just quickly scan this, there's no major retracement, right? Even in terms of something simple like solid IO fed after the initial displacement is not offered. There's a tiny one here. There was one in the initial move, but then again, right, when price started reversing here, we weren't confident in the reversal yet anyways. But since that break, and now we're saying, okay, yeah, definitely lower prices towards this monthly fair value gap. As you guys can see, there's not much opportunity offered, right, to directly align ourselves with this, which makes for very frustrating price action, right? It's playing out your expectations, but it's not coming into your hands. And, it's probably a point where a lot of people might tend to FOMO or, try false entries and whatnot, which, of course, to an extent, I understand. But, as usual, if price is not taking your boxes, then we shouldn't really be entering, right? Despite doing what we want, if it's not giving you that good opportunity to get in on a lower time frame with a safe stop loss, all those things, then should you really be entering? Sorry. So cool. Where do we go from here? We look at our monthly candle. We spoke about this, right? We said, look, regardless of bullish or bearish, this is the next target. Now, it looks like we have absolutely hammered through this monthly fair value gap, but something to bear in mind is that we still have 23 days left of this monthly candle. It is very early. Now, despite that, I think we will continue lower. If we zoom out, to me, this is simply a market maker sell model. We've wanted this for a while: accumulation, manipulation, and distribution this way, right? That's a monthly AMD. And now on the daily time frame, we also knew that this is a very solid market maker sell model. Back to this initial consolidation, we had some reaccumulations, right? Reaccumulation, SMR pair after the big liquidity sweep. And now we'll get some solid displacement, right? Even here, right, this was a pretty good sort of run up. We had this little AMD running into a weekly order block, and then of course this massive move down. Now, what's the sort of next step from here? How do we approach this for next week if we want to continue seeing lower prices, right? So now what we know, or what we can see rather, the week has closed very strongly bearish, right? It has done a lot of expansion. And if you come over to our economic calendar, we can see, right, looking at next week, of course, we have some movers very similar to last week. So the expectation sort of sits on how volatile can these movers be, right? So we have the CPI on the Wednesday, job openings on the Tuesday, PPI on the Thursday. These are the main ones I would look at. And then, of course, we have some red folders on the Friday as well, right? But the main one that I'll probably paying attention to, the CPI. Now, what I would like to see is a continuation, right? So very simply put, if we're going to see a continuation, I'll be identifying the first sort of array that in my eyes, sort of makes me think, okay, we can reverse from here, which is the daily fair value gap. Can we trade higher than this? Yes, of course, right? But looking at a weekly candle like this, right, and usually if we look in the past, usually when we get a very solid one-way expansion, you're not going to reverse most of that expansion. If price is, continuing to be bearish, if it wants to continue down, then it's likely that we get a sort of, a shallower retracement and then the move back down. Bear in mind, our next sell side target is within reach, it's very, very close, which is this sell side liquidity. So The area that I was specifically watching, and we can mark out, is this daily fair value gap, right? Cool. So from this daily fair value gap, okay, good. So from this daily fair value gap, if price can trade into this, just the usual, guys, it's the same draw every time. If we can get a bit of displacement lower, you know, the daily kind of start shaping up, you get your hourly market structure shifts, etc., etc., then your next obvious target will become previous weekly low, followed by this sell side liquidity, and from there we might continue low. The other scenario that is a possibility, right, but I'm not really banking on, considering how close we are to the sell side, is that the next weekly candle actually trades bullish, right, sort of similar to this, ends up being a bearish order block, and then the following week my IO Fed will just, you know, trade away, right? But again, like I said, the reason for us favoring that first scenario of continued expansion is based on how close we are to this sell side. In the off chance that price, you know, runs down first, takes this sell side liquidity, then we can say, okay, cool, now we might be bullish until these daily fair value gaps, and then we look for that continuation again. That way we might be able to trade up and trade away from them as well, right? But with that, we'll see when we get there, right? Especially with the coming week. Like I said, I know the first you know, news fold is on the Tuesday, but it's not as big of a mover, right? It might be a scenario where we let the CPI play, let things become clear, and then, you know, tackle it from there on. Another thing I forgot to mention is there's actually a what's it called, a time zone shift in the US, right? So this time zone shift happens for us guys in the UK, I believe, at the end of this month. So this is just something to bear in mind. You're probably gonna have to change the timings on your trading views so everything still matches up, right? I believe it goes 1 hour backward. I'm not sure, but you know, I'm sure everyone can figure that one out. So cool. With the US 10-year, again, very expansive chart, right? And the monthly candle is kind of interesting. We've swept a, you know, major sell side liquidity point that's been there for a little while, down to a weekly, and of course we reverse back into range. With the bond yields, right, of course this could be an internal range sweep and a reversal, right? I'm not hoping for this to be a reversal to the highs. Rather, I believe we have a nice daily range, right, all the way from this high to this current low, and of course a retracement is offered because we've just taken some sell side and our price come back into this range. So I would like to see a run on these highs, right? Not necessarily into the premium, but just a run on these equal highs here, because this is a weekly IO Fed. If price can tap into the weekly fair value gap here and trade lower, you know, that would make for a good scenario for us, and it will make for a low resistance liquidity run on the US dollar, right? On the DXY. Yes, Euro GBP been a very, very volatile market. Very interesting. Now, it has thrown me off a bit, right? Previously, we just, you know, looking at this monthly candle and how close we were to the sell side, we just wanted to be bearish. Right? We just wanted to see the lows get taken. We were considering, you know, you might get previous weekly high sweep because you got quite close to this towards the start of the week, and then from there reversal. But instead, price has just absolutely displaced up. So where do we go from here? Right. If we zoom out and you guys can see the screen, this is all just one big consolidation. Right. The fact that price got very close to those lows and then reversed this hard, we're back in the premium. We can trade a little higher, dig more into this, right? So what I would look for is how we treat this daily fair value gap. Do we come here, respect this, and start trading higher? If so, then you know, Euro GBP likely to be bullish at least until this high, maybe a little bit past that. And then from there, once we're here, then we can, you know, think about, okay, is it going to reverse low? It's just, you know, if it's a consolidation, it's just going to go premium to discount, discount to premium, sort of back and forth till we have something to kick us out there. And, you know, for the time being, there's nothing solid for us to sort of go off of. I believe a couple weeks ago, we were looking at this one weekly fair value gap, which of course did not get touched, didn't get tapped at all, but instead price engineered high above it. There is a, you know, small chance that we can trade back into this, but of course, considering proximity and considering the premium of this range, you know, there's also the likelihood of we can reverse from here. I know it sounds a lot like, oh, we can go up, we can go down. It's a bit everything, but it's a consolidation. Essentially what I'm saying is, right, instead of being too worried or prices reaching for this and whatnot, and just, you know, marrying a trade idea before it's even there, it's simply just play it level to level. We know that, you know, again, regardless of bullish or bearish scenario, price is probably going to approach this daily fair value gap, right? So when it approaches this daily fair value gap, if it now comes and starts looking like a daily alpha, then you know, okay, let's look for higher prices on Euro GBP, at least until the local target, which is this. If price instead comes here and starts, you know, pushing through the daily fair value gap, you know, for example, here, this could be if we completely displace this way, and then we get like a second leg on the 4 hour, that's essentially a market structure shift, right? Second leg, and then, you know, now look for lower prices. So essentially, it's a chart, you know, if we're trading intraday, we need to pay a lot of close attention to. Right? We need to watch very intently. Speaking of Euro USD and Euro GBP, Euro USD and GBPUSD. Okay, cool. As you guys can see, as some targets marked, prices absolutely smashed through these targets. So for a while, right, the Euro USD was actually lagging. You guys see this little like cluster of highs? We were actually struggling to break these. And I had this marked out for quite a while, you know, this high, these little equal highs. I want to see price break these, and then, you know, if we break through these, then eventually this high. And after not breaking them for a little while, price just absolutely smashed through everything in 2 daily candle. The next sort of target that I would mark, next obvious target, is this. Bear in mind, right, of course, we've spoken about a daily market maker sell model on the DXY. So in turn, we have a daily market maker buy model on Euro USD, right? So we have some very nice targets. We have an initial consolidation to work with. I know we're extremely sort of overextended, right? That is why we've said, let's see what price does. Again, we want to come back to these daily fair value gaps, see if price offers us anything to go this way, right? And then we've got the next target in very close proximity, quite similar to the DXY. So what's that level? That is 1.09 and that is 1.12, just for reference. And very similar on the GBPUSD, guys, we'll see. Cool. Yeah, so GBPUSD was actually delivering to the targets we wanted anyway. So this little high here was our first target, which is not even marked. The next target was these highs, which got taken. And the next one after that was this buy side, which also got taken, right? So remove that for a second. But as you guys can see, the market maker buy model, right, is not as clean on GBPUSD necessarily, right? It's not that typical AMD, right? It's sort of there, but it's not, right? Especially with this initial move up here. However, we still remain bullish on it for the time being. The next obvious target is this buy side that we can target for price. Again, very similar to that DXY target in very close proximity. I'd mark these out on your chart. And then, of course, past that, we'll also just mark the top of this as well. I'd expect price to reach for the market maker buy model. And yeah, that's quite a significant move. Bear in mind, this is the daily chart. I'm quite zoomed out. You know, price is at 1.29 and the target, you know, here is 1.34 for us. And I know we've had a very large move and it might seem like, you know, that, you know, price is just going to fly there. It's not. There's probably going to be a lot of time in between going from here to anywhere close to there. Just bear in mind, right, let's say from here, when price made this high, 26 September, to get down to like the sort of current price level was a span of almost 2 months with a lot of consolidation in between, as you guys can see. And to even just make that low, of course, right, all the way to low is January 25. So that's gone September to January. That's about a whole quarter. So if we are expecting to move up, bear in mind, it's not going to be, you know, every week's not going to look like this current week. It's not just going to fly up there. It's going to take a bit of time. So that's that's not a bad thing by any means, by the way. That gives us more opportunities to sort of align, play to short-term targets. We're intraday traders after all. If you're a swing trader, it's going to be your dream if you go in anywhere here and our price just kicks that way, right? But for us as intraday traders, it's actually better to get, you know, that sort of you know, slower price action to an extent. Not slow, but slower than what it was last week. But then it gives us opportunities to align, you know, do the simple things like target the previous daily high, low, etc. Right, make things easy for us. So I just wanted to check. Somebody told me to cover a topic this weekly outlook. I believe I did touch on it. Yeah, I think I did touch on it. So somebody asked, can you touch on what to do when you have direction but no retracements or entries intraday? Simply do nothing. Just sit on your hands, right? There is nothing for you to do. If price is not offering what you want, then you get me, why are you going to change what you want, right? You need price to play into your hands. You don't play into price's hands, because that's how you get chopped around. So cool. Coming on to Bitcoin. Of course, we had this tap into equilibrium. We discussed the idea of, you know, price can still come and sweep this previous monthly low. After we made the swing low and price displaced higher, it sort of made me think, okay, we've gone back into this consolidation. If price continues higher here, this could be it. This could just be the AMD. Now, that idea is not completely written off, right? I don't think it's fully off the charts, but what we can see is Bitcoin is just back in that consolidation mode. This is a proper retail pattern. It's called like a wedge, right? Triangle shape, building liquidity on both sides. I think from here, if we get another kick low, the obvious target is the previous monthly low. If we're willing to get a second leg higher, right? If we can push through these highs with a good bit of displacement, which is still a while away, that's about 95k, 10k move, you know, then we can start considering higher prices, new all-time high, etc. But until we get a solid kick this way, then I wouldn't be very hopeful. And just, you know, just generally looking at the charts, we've had a large move. Usually after large moves on Bitcoin, you tend to get a good bit of chop. So I believe that's just where we are right now. There's no solid expectation of either side with high conviction. So it's just a matter of patience, just seeing what price wants to do, and keep letting it engineer the liquidity, because then once it has engineered this liquidity and then it sweeps one side and starts moving the other way, then it becomes easier to read, like, okay, yeah, it's going here, it's going there, wherever it is. Okay, cool. S&P. It's a bit too zoomed out for the monthly. So cool, we've got, you know, clearly this is just a consolidation, right? Even before I come into my lower time frame, this is just chop. You see candles so tightly put together. Look at these candle closes, right? 1, 2, 3, 4. Right, it's starting to look like a hand. It's just, you get me, you just got these engineered wicks, all these close in the same area, and ever since about, you know, let's say about this candle, we've just been in that sort of range, and price hasn't really broken out, done anything major until, I would say, you know, sort of so far. This is the first, I would say, solid kick we've got in a little while. Now, what do I want to see from here? Again, I think this is engineered liquidity up top, especially with those candle closes. I think, you know, price will return back there, especially, you know, considering the idea we have a very bearish DXY right now that we want to see continue. It makes sense for the stocks to go higher. Now, what is the short-term play here? We spoke about this last week. We considered, you know, if price breaks lower, this is an accumulation. This will be manipulation and then distribution this way. Now, what price has done so far, you know, of course, we swept the previous weekly low. We've swept this, I believe, is the previous monthly low, and another monthly low, I believe, right past that. So from here, if we sort of, you know, zoom out, the sort of last, I would say, very clean and obvious swing point is, of course, this wick, right? Now, this might be on like, for example, 2-week time frame or something like that gets cleaner. Or, you know, we can shuffle through time frames and try and like cherry pick which one's the cleanest. But if we just go off this wick to the current high, right, and we consider that our range, then what we can see is this is a lot of accumulation, like we said, and this is price trading towards the discount and the equilibrium. If price can, you know, continue down a little more, it wouldn't hurt us. And from there, we get a market maker buy model back to the highs, right? Especially if you come into a 4-hour, we've got that initial consolidation, lots of reaccumulation. So if we can hit the equilibrium, get one more nice sweep that whole sell side liquidity that's been engineered, this little trend line here, and then from there, reversal back to the highs. That's the sort of scenario I'm looking at. I'm not bearish on the stocks here. I don't believe we have reason to be. I do think they were very sort of overextended, and something like this was due, right? I think the market was just sort of running on fumes at the top. There's a lack of liquidity, lack of, you know, sort of, let's say, hype and people entering. So I believe this was necessary, right? Price has to do that accumulation, engineer the liquidity, retrace, and then eventually we'll get the move back up. But yeah, guys, that is it for the weekly outlook. I believe, last week, I know it is frustrating. Like, I think we had a very good read on price, and then price absolutely, just did not give us what we want in a lower time frame sense. It didn't offer us any solid entries, and it's very, very hard to watch price just, swing past you, smash your targets, and it's giving you absolutely nothing. But it happens, right? Just how it is sometimes. And as I said to the mentorship chat, if you guys are from the UK, we've had some very, very nice weather recently. Sometimes it's okay, right? If you've been putting in the work, you've been watching the charts intently, just give yourself that bit of time. We don't get a lot of sunshine most of the time, so it's good to make the most of it, right? Especially, for example, last week, to certain days that are just completely written off. And, for example, the Friday or even the Thursday is just a no trade day. So right off, let's just leave it out, right? Just go about your day, come back to it later, like today on the weekends, do your price review, go again for next week. But yeah, guys, we have some solid expectations for price. Like I said, I'll come back to it one more time. On the DXY, we can actually play both scenarios. If price is willing to go here first, display slow, we can target the low. If we instead go lower first, then there's a chance this will be a weekly order block being created and we can trade higher towards this. The only thing I would say is, with a very sort of extended range, don't force things. Even the previous week, we didn't have the expectation every day will move lower. And I think probability wise, the odds that the next week, every single day also hammers lower is extremely low, but it's never zero, right? So don't do silly things just trying to chase price. As normal, doesn't matter how, sort of price is behaving in that sense, but let it play into your hands. Until price is doing what you want specifically, what you know for your model, your strategy, whatever it is, you just don't do anything. Simple as. All right, guys? But yeah, guys, I hope everybody has a good trading week. Any questions, anything I help with, or any topics you guys want me to cover in like sort of upcoming videos and weekly outlooks, just let me know and we'll get to it.